Welcome to Wall Street, the heart of the financial world, where fortunes are made and dreams take flight. It's a whirlwind of activity, a symphony of numbers, and a roller coaster of emotions. Whether you're a seasoned investor or just starting out, understanding the stock market can seem like navigating a labyrinth. Think of it as an amusement park right now with different rides, each offering its own thrills and spills for the sake of the video. In this animated adventure, we'll demystify the world of finance, breaking down complex concepts into bite-sized pieces. So buckle up as we explore the million ways to attack the stock market. Meet Stock, the boisterous bull, representing individual company stocks. He's all about growth potential and riding the waves of market sentiment. And then there's ETF, the savvy investor who believes in diversification and long-term gains. Bond, the wise old owl, prefers a more conservative approach, focusing on stability and fixed income. Together, these characters will guide you through the exciting world of the stock market, explaining their roles and how you can make them work for you. Let's start with the star of the show, Stock. He's the heart and soul of the stock market, representing ownership in publicly traded companies. Think of companies like Apple, Tesla, or Amazon. They all started as small ideas that grew into giant corporations. When you buy a stock, you're essentially buying a tiny piece of that company. As the company grows and its profits soar, the value of your stock is likely to increase, allowing you to sell it for a profit. Some stock prices fluctuate constantly, influenced by factors like company performance, economic news, and even investor sentiment. Remember, investing in stocks can be a long-term or short-term game. It is just about whether the market is participating in the growth of companies you believe in. Now let's dive into some key concepts that every beginner investor should know. First up, we have market capitalization, or market cap for short. It's simply the total value of a company's outstanding shares. Next, we have dividends, a portion of a company's profits that are distributed to shareholders. Then there's the price-to-earnings ratio, or PE ratio, a valuation metric that compares a company's stock price to its earnings per share. Understanding these basic concepts can help you make more informed investment decisions. Now that we've met Stock, let's introduce you to his cousin, ETF, or exchange-traded fund. Think of ETF as a basket of stocks, bonds, or other assets that you can buy and sell on stock exchanges, just like individual stocks. ETFs offer investors instant diversification. Instead of putting all your eggs in one basket by investing in a single stock, an ETF allows you to spread your risk across a variety of assets. This diversification can help smooth out the bumps in the road and potentially lead to more stable returns over time. Whether you're a seasoned investor or just starting out, ETFs offer a convenient and cost-effective way to build a diversified portfolio. Hold on to your hats, folks, because things are about to get interesting. Meet stock options, the daredevil of the financial world. He's all about leverage, speculation, and potentially making a killing or losing your shirt in a short amount of time. Unlike stocks, which represent ownership in a company, stock options give you the right but not the obligation to buy or sell a stock at a specific price by the agreed-upon expiration date. There are two main types of stock options: call options and put options. A call option gives you the right but not the obligation to buy a stock at a certain price, which simply means the buyer expects that the stock price will go up. A put option gives you the right but not the obligation to sell a stock at a certain price, securing it before it goes down. Think of it as insurance for the stock. To navigate the world of stock options successfully, it's essential to grasp a few key concepts. First, we have intrinsic value, the difference between the current stock price and the option's strike price. Next, we have time decay, also known as theta. This refers to the gradual decline in an option's value as it gets closer to its expiration date. High volatility can mean bigger potential profits, but also greater risks for options traders who are utilizing these contracts. Remember, stock options are not for the faint of heart. They require careful planning and risk management. After that wild ride with stock options, Let's take a breather with bonds, the reliable and dependable member of our financial family. Think of bonds as loans that you make to governments or corporations. When you buy a bond, you're essentially lending money to the issuer for a fixed period of time. In return, the issuer promises to pay you regular interest payments and to repay the principal amount of the loan when the bond matures. Bonds are generally considered less risky than stocks because they offer a fixed income stream and are less volatile. Just like stocks, bonds come in various flavors, each with its own risk and return profile. Now let's meet the littlest members of our financial family, the commodities. Don't let their small size fool you. These babies are the essential building blocks of the global economy. We're talking about raw materials like oil, gold, agricultural products, and more. From the food on our tables to the energy that powers our homes, commodities are everywhere. Think about it. When oil production is disrupted, gas prices at the pump tend to rise. Understanding these connections can give you valuable insights into the complex web of global trade and economics. Investing in commodities can be a way to diversify your portfolio and potentially hedge against inflation. Let's start with gold, the precious metal that has captivated humans for centuries. Known for its beauty, rarity, and ability to hold its value over time, gold is often seen as a safe haven asset. During times of economic uncertainty, investors often flock to gold as a store of value. You can invest in gold in various ways, from buying physical gold bars or coins, to investing in gold ETFs or mining company stocks. Remember, while gold can provide a hedge against inflation and market volatility, it's not a guaranteed path to riches. Like all investments, gold prices can fluctuate, and it's essential to invest wisely and strategically. Now, let's dive into the world of oil, the black gold that fuels our modern world. From powering our vehicles to heating our homes, oil is the lifeblood of global transportation and industry. The price of oil is influenced by a complex interplay of factors, including global supply and demand dynamics, geopolitical events, and technological advancements. Investors can gain exposure to the oil market in several ways, including investing in oil company stocks, energy ETFs, or even oil futures contracts. However, it's important to remember that oil prices can be highly volatile, subject to sudden swings based on news events or political instability. Fasten your seatbelts as we jet off into the world of Forex, short for foreign exchange, the largest and most liquid financial market in the world. Here, currencies are traded 24 hours a day, 5 days a week, reflecting the constant ebb and flow of global commerce. Imagine a giant digital marketplace where currencies like the US dollar, the euro, the Japanese yen, and countless others are constantly being bought and sold. Forex traders aim to profit from the fluctuations in exchange rates between different currency pairs. Forex trading can be highly speculative and involves significant risk, especially for beginners. It's crucial to understand concepts like leverage, margin trading, and risk management before diving into this fast-paced market. The Forex market is driven by a complex interplay of factors, including economic indicators, interest rate differentials, geopolitical events, and even market sentiment. For instance, if a country's central bank raises interest rates, its currency tends to strengthen as investors seek higher returns. Forex traders rely on technical analysis, fundamental analysis, and a deep understanding of global macroeconomic trends to make informed trading decisions. Technical analysis involves studying charts and patterns to identify potential trading opportunities. The Forex market's 24/5 nature and high liquidity offer traders flexibility and the potential for quick profits. Prepare to enter the digital frontier as we explore the world of crypto, short for cryptocurrency, the wild west of the financial world. Imagine digital currencies secured by cryptography operating independently of central banks and governments. Bitcoin, Ethereum, Litecoin. These are just a few examples of the thousands of cryptocurrencies that have emerged in recent years. Cryptocurrencies are built on blockchain technology, a decentralized and transparent ledger that records all transactions across a network of computers. Investing in cryptocurrencies can be highly speculative and volatile, with prices often subject to wild swings. However, it also offers the potential for significant returns and the opportunity to be part of a technological revolution. Now, prepare to peer into the future with us as we unveil the enigmatic world of future contracts. Imagine a marketplace where you can buy or sell assets at a predetermined price on a specific date in the future. From commodities like oil and gold to financial instruments like currencies and interest rates, futures contracts cover a wide array of assets. These contracts allow businesses to manage their risk by locking in prices in advance. Let's say you're a farmer who wants to protect yourself from a potential drop in wheat prices before harvest time. By selling wheat futures contracts, you lock in a price today for your future harvest, ensuring a predictable income regardless of market volatility. Future contracts are powerful tools for both hedgers and speculators. Hedgers, like our farmer and bakery owner, use futures to manage their price risk and protect their businesses from unpredictable price swings. Speculators, on the other hand, aim to profit from price movements in the futures markets. Think of speculators as the risk takers in the market. They carefully analyze market trends, economic indicators, and geopolitical events, placing trades on the future direction of asset prices. Understanding the intricacies of leverage, margin requirements, and risk management techniques is essential for anyone considering venturing into the world of futures trading. Section 3. Navigating the futures market. Not for the faint of heart. The futures market is not for the faint of heart. It's a fast-paced, high-stakes arena where fortunes can be made and lost in the blink of an eye. Successful futures traders possess a unique blend of analytical skills, risk tolerance, and emotional discipline. They must be able to process vast amounts of information quickly, make split-second decisions, and remain calm under pressure. Sound intimidating? It can be. That's why it's crucial to start slowly, educate yourself thoroughly, and consider seeking guidance from experienced professionals before diving headfirst into the futures market. Remember, knowledge is your most valuable asset in the world of finance. By thoroughly understanding the intricacies of future contracts, managing your risk effectively, and approaching the market with a healthy dose of caution, you can navigate this complex landscape and potentially reap the rewards it offers. As we've explored the diverse cast of characters in the stock market, it's crucial to remember that they don't exist in isolation. Like pieces on a grand chessboard, their movements are interconnected, influencing and responding to each other in a complex dance of risk and reward. A surge in oil prices, for instance, might benefit oil company stocks but potentially hurt airlines grappling with higher fuel costs. A strong US dollar could make US exports less competitive, impacting company earnings and potentially influencing stock valuations. Understanding these interrelationships is key to making informed investment decisions. It's about seeing the bigger picture, recognizing patterns, and anticipating how events might unfold. It's about appreciating the symphony of the market, where each instrument plays a crucial role in shaping the overall melody. Remember, the stock market is a dynamic ecosystem, always evolving, always presenting new opportunities and challenges. By staying informed, diversifying your investments, and managing your risk wisely, you can navigate this exciting landscape and potentially achieve your financial aspirations. Think of the stock market as a grand symphony, with each instrument playing its part to create a harmonious whole. Stocks, with their growth potential, provide the soaring melodies. Bonds, the steady and reliable baseline, offer stability and balance. Commodities, the raw materials of our world, add texture and richness. Currencies, constantly flowing across borders, create a rhythmic pulse, while cryptocurrencies, the disruptors, introduce new sounds and possibilities. And future contracts, the forward-looking instruments, add an element of anticipation and excitement. Just as a conductor guides the orchestra to create a cohesive and breathtaking performance, so too must investors learn to navigate the complexities of the market, understanding the interplay of its various instruments. It's about recognizing that risk and reward are two sides of the same coin, that diversification is key to long-term success, and that knowledge is power in the world of finance. Your journey into the world of finance is just beginning. It's a journey filled with possibilities, challenges, and the potential for incredible rewards. Like any worthwhile adventure, it requires preparation, knowledge, and a willingness to embrace both the ups and downs along the way. Remember the valuable lessons you've learned from our animated guides: stock, ETF, bond, the baby commodities, Forex, crypto, and future contracts. They've shown you the power of diversification, the importance of risk management, and the need to stay informed about market trends. As you continue your financial journey, don't be afraid to seek guidance from experienced professionals, to continuously learn and adapt, and to make informed decisions that align with your individual goals and risk tolerance. The world of finance can be complex and intimidating, but it's also filled with opportunity. By embracing the lessons you've learned, approaching the market with confidence and a thirst for knowledge, you can chart a course toward financial empowerment and achieve your dreams.